Okay, this is Okay.
Yeah, we do want to come out.
Perfect. We'll do it.
Hey, Andy,
It's pretty awesome.
Andy Matthews, are you there in Carson City?
I don't know how great it long term, but
Yeah.
He is on his way up to the dais.
All right, can we swing the camera? There it goes. All right.
Morning, Lori.
Good morning. I apologize. We were all a little chatty this morning.
Oh, finance people are chatty.
Andy, let me know when you're ready.
I'm ready, sir.
Okay. All right, we'll kick it off. The State of Nevada State Board of Finance meeting scheduled for today, April 22nd, 2026, and the time being 10 a.m. And Lori will start with the roll calls.
Good morning. Governor Lombardo,
Here.
Treasurer Conine,
Here.
Controller Matthews,
Here.
Member Edwards,
Here.
Member Navarro.
Here.
Let the record show we have a quorum.
All right, thank you. We'll move on to agenda item number 2, the first opportunity for public comment. Comments from the public are invited at this time pursuant to NRS 241-020-3D7. The board intends to limit public comment to 3 minutes. And do we have anybody there in Carson City?
We do not.
We have anybody here in Las Vegas wishing to provide public comment? All right, seeing none. Nobody online? All right, we'll close the first opportunity for public comment. Move on to agenda item number 3 for discussion and possible action. Board of Finance meetings from the meeting held on February 11th and 2026. Any questions, concerns, or deletions, or additions?
I'll go for approval.
All right, we have a motion for approval. All those in favor signify by saying aye.
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 Motion passes. All right, we'll move on to agenda item number 4 for discussion and possible action. Nevada Housing Division's request to approve the administrator's findings of facts pertaining to the issuance of up to $30,500,000 of multi-unit housing revenue bonds known as Robindale Senior Apartments.
Good afternoon.
How that are you, Chris?
Good morning,
There you go,
Governor.
Steve. Good morning.
Good morning, Governor. Good morning, Treasurer. Good morning, Controller, members of the board. For the record, my name is Steve Acroth, Administrator of the Nevada Housing Division. With me in Las Vegas is our Chief Financial Officer, Christine Hess. We're doing a split screen today. And we come before you to seek the approval of the board for the finding of facts pertaining to the issuance of up to $30.5 million of NHD multi-unit housing revenue bonds for the Robindale Senior Apartments. These bonds will be used to provide for the new construction of a 363-unit affordable senior apartment complex in Clark County, located on East Robindale Road, just east of the 215 Beltway. The rental housing will serve 363 households at or below 60% of area median income, with 37 units serving 50% area median income households and 59 units at 30% AMI and below. This proposed development is supported through over $9 million of Clark County Community Housing Funds and a division gap loan. The development group is led by Ovation Design and Development and Coordinated Living of Southern Nevada, and they currently have over 4,000 affordable units in Southern Nevada in their portfolio, which are either occupied or currently under construction. I will now pass it to Christine to talk about the financial structure.
Morning, Governor, Treasurer, members of the board. Christine Hess for the record, and good morning, Steve. So the proposed plan of financing is a cash-backed forward structure with permanent phase financing as a private placement of the bonds through a Freddie Mac tax-exempt loan or Freddie Mac TEL program. During the construction phase, up to $30.5 million in tax-exempt bonds will be issued as a public offering and fully collateralized. There's an additional $28.2 million construction loan or bridge equity loan by Wells Fargo, not issued by the division. This requested amount is slightly over the maximum tax-exempt bond amount of 30% of the project's aggregate basis at 31.3%. However, this amount matches the amount of the permanent mortgage and the division does consider this request to be reasonable. New for this project and the second new construction project that you'll hear today, the Housing Division has issued a waiver for NAC 319.722, and we're allowing for a 5% hardship developer fee. This is necessary for the financial feasibility and importantly will not result in an increase in developer compensation. This will generate approximately an additional $2.1 million in federal low-income housing tax credit equity investment, and in turn preserves the state's limited gap financing resources. Nationally, there are at least 10 other states that allow for developer fees ranging from 18 to 25%, which include Tennessee, Kentucky, North Dakota, Ohio, Oklahoma, Wisconsin, Arizona, Florida, Iowa, and West Virginia. So in addition to the $30.5 million in tax exempt bonds, this project, as Administrator Acroft noted, has $9.225 million in Clark County Community Housing Funds, a Nevada Housing Division gap loan of $5 million, and they also have a $1.5 million sponsor loan, and they are deferring $9.1 million in developer fee. This project is anticipated to attract approximately $46.1 million in private equity investment from Wells Fargo in exchange for the 4% low-income housing tax credits.
Good.
That's it.
Any questions?
More of a
Questions
comment.
from Ovation?
No, we're just happy to be here. Thank you.
More of a comment, Governor, if I could. I
Sure.
want to thank Christine and Steve, Jess, and the entire Ovation team for continuing to look for innovative ways to get through what are some challenging times on the financial side. So I'm glad that we're trying this new hardship fee, but I just broadly more appreciate the flexibility and kind of the commitment to getting the work done.
Thank you. It's a real win for the community. These dollars really go straight into workers and building, so it's exciting.
Chris.
Governor,
Yes.
I have one thing to put on the record. I have
Can
no,
you identify yourself?
this is Ben Edwards, public member. I have no concerns about this project, but I'm going to abstain because I have a role with a law firm that has a relationship with one of the lenders that I have no reason to believe is in any way related to this, but for the avoidance of any possible conflict, I'm going to abstain. Thanks.
Hey, Lori, just for the record, Jess Malasky made comment earlier if you were asking who that person was.
Okay, thank you.
All right, if there are no further questions, I'll entertain a motion for approval.
I'll vote to approve.
We have a motion for approval. All those in favor signify by saying aye.
Aye.
Motion passes. Congratulations. Thanks for making the effort to show up today.
Of course. Sorry, I was almost late.
You're welcome to stick around if you want. All right, we'll move on to agenda item number 5 for discussion and possible action on the Nevada Housing Division's request to approve administrator's findings of facts pertaining to the issuance of up to $22,395,000 of multi-unit housing revenue bonds known as Apache Pines Family Apartments located in Clark County, Nevada. Mr. Acroft.
Thank you again, Governor, and members of the board. For the record, Steve Acroft, and I do want to put on the record one correction. I didn't notice it until yesterday, that the agenda item indicates a rehabilitation of a 270-unit family affordable housing project. The finding of facts and everything you're going to hear reflect 274 units. That's me not copying and pasting correctly. I can't blame it on fat fingers because a 0 and a 4 are nowhere located near each other on a calculator. Anyway, we come here before to seek the approval of the board for the finding of facts pertaining to the issuance of up to $22,395,000 of NHD multi-unit housing revenue bonds for the Apache Pines Family Apartments. These bonds will be used to provide for the acquisition and rehabilitation of a 274-unit affordable family apartment complex in Clark County, located at 9552 West Tropicana Avenue, just west of the 215 Beltway. The rental housing will serve 274 households at or below 60% of area median income, with 162 units serving 50% area median income households. The proposed development is supported through a division gap loan. The development group is led by Nevada Hand, and they have over 6,500 affordable units in Southern Nevada in their portfolio, again, which are either occupied or currently under construction. Please go into the financial structure. Ms. Hess.
Great, thank you, Administrator, Governor, members of the board, Christine Hess, record. And of course, with us is the Nevada Hand team. Today's agenda is chock full of complex projects. This one is not less complex, however, it is a little more straightforward, and one that's a little easier to speak to in terms of financial structure. This project is a direct placement with Citibank of tax-exempt bonds not to exceed $22.395 million to be issued by the division. The bonds will be reduced to $17.64 million after the construction phase and upon conversion to the permanent phase. Citibank is also providing a taxable loan not issued by the division of $21.705 million during construction. This project has a seller note of $15.785 million and will also provide a loan to the project if they do not receive a Federal Home Loan Bank of San Francisco Affordable Housing Program or AHP award. The Housing Division is providing a $4 million gap loan, which comes after the repayment of a current outstanding gap note of approximately $4.4 million. The developer is deferring $5.9 million. This project's anticipated to bring in approximately $27.4 million in equity investment sponsored by National Equity Fund in exchange for the 4% low-income housing tax credits. And as I noted, I have the Nevada Hand team right here to my right, and I'm happy to take questions.
We have any questions? Any members? Oh, good job, Christine.
Easy one.
All right, if there are no questions, I'll entertain a motion for approval.
This is Andy Matthews. I'll move for approval.
All those in favor signify by saying aye. Aye.
Aye.
Is everybody right? Motion passes. Congratulations.
Thank you. Look forward to it.
Yeah, absolutely. Good to see you guys back on the blotter.
Thank you.
All right, we'll move on to agenda item number 6. Discussion and possible action of the Nevada Housing Division's request to approve the administrator's findings of fact pertaining to the issuance of up to $40,505,000 of multi-unit housing revenue bonds known as Bonterra Apartments located in Washoe County, Nevada. Mr. Acroft.
Thank you again, Governor, members of the board. My name is Steve Acroft, Administrator of the Nevada Housing Division. We come before you to seek the approval of the board for the finding of facts pertaining to the issuance of up to $40,505,000 of NHD multi-unit housing revenue bonds for the Bonterra Apartments. These bonds will be used to provide for the new construction of a 240-unit affordable family apartment complex in Washoe County, located on Chocolate Drive in the Sun Valley area of Washoe County. The rental housing will serve 240 households at or below 60% of area median income. The proposed development is supported through a division gap loan. The development group is led by PedCore Investments, and they have over 178 low-income housing tax credit apartment communities, totaling over 23,000 units in their portfolio in 21 states. But this will be their first in Nevada. The development team, is my understanding, is represented both in Carson City and Las Vegas. So they're here if you have questions. But before we get to that, I will turn it over to Christine.
Great, thank you, Administrator, members of the board. So this project is, again, a little more complex. The proposed plan of financing for this project includes up to $40.505 million in tax-exempt bonds issued by the division as a private placement with Merchants Capital. During the construction phase, the bonds will be held by merchants and secured by a first mortgage. The permanent phase financing will be provided by a HUD 223F tax-exempt housing mortgage loan. The HUD loan will be underwritten by Merchants Capital in their capacity as a HUD-approved lender and servicer. Upon conversion, the collateral for the tax-exempt bonds will transition to a Ginnie Mae security. Like the earlier new construction project, this project will also exceed the 30% maximum of aggregate basis for the tax exempt bonds at 34.4%. However, the division has deemed this necessary for financial feasibility, and this amount will remain in the project in the permanent phase. Again, like the earlier new construction project, this project also requested and received a waiver to NAC 319.722 and has included a 5% hardship developer fee. And again, there will be no additional developer compensation. This will generate an additional approximately $2.2 million in federal loan from housing tax credit equity investment, and in turn preserves the state's limited gap financing resources. This project includes an unusually large developer investment with a GP subordinate loan of $19.25 million. Additionally, the Housing Division is providing $5 million in gap financing. Merchants Capital Investments will provide approximately $51.3 million in equity investment in exchange for the 4% LIHTC. And as Administrator Acroft noted, in Carson City and here in Las Vegas, we have the developer present. Thank you.
So are you Petcor?
Yes, sir. I'm Craig Marashki, one of the developers. And also Ryan Rogers is there in Carson City. He's been working on this project about 4 years as well.
So Craig, why Nevada?
Well, we, as indicated, we're in 22 states. We have a pretty big presence in the West. We have 6 deals in Colorado. We have a project in Idaho we're finishing up, some in California, Colorado. And this is a site we got under contract about 4 years ago. It's in unincorporated Washoe County, and we've been working on it. Obviously, Nevada is a great state, a lot of growth in it. And, you know, we just feel it as a natural progression to try to do more affordable housing. And I know there's a huge need in the state. And I'm not just saying this because we're here asking for money, but the staff here in Nevada has been awesome to work with. As I mentioned, you know, we are in a lot of states, but to be able to present this in front of the governor, and you know, Steve and Christine have been awesome to work with on a very complicated deal. So we think Nevada is a great place to be. Thank you for considering our request.
Absolutely. So I don't know who's better to answer this, whether it's Christine, Steve, or Craig. But my understanding it's $507,000 per door. Is that correct? So how does the individual qualify as an affordable housing customer with that price tag? How does the finances work in that fashion?
I can help. I'll start off, and Christine and Steve obviously can add on to this. So the rents are capped, so it's a rental project. So the rents are capped at 60% of the area median income. So that total development cost, which I know is a bit high, but our rents will still be, you know, comparable to
So
any
you can
other.
still make that math work.
Yes, sir. As Christine indicated, we do have a large sponsor loan, so we're going to loan $19 million into the project, which hopefully at some point we will get back later in the future after all our other debts are paid. But we're very committed to this project. So.
Okay.
Yeah, I think if I may also kind of bring things together, and excuse me, Steve, if you wanted to speak.
Has that
Okay,
ever stopped you before?
No, but see, I do once in a while ask for permission. I think this project also really showcases the need for the public-private partnership in these, right? So in order for that pro forma to work over the length of years and to be able to service the debt, right? Some of the financing tools are coming in as subordinate financing, right? The division's gap loan, for example, or the GP loan. So that's how we're seeing them able to still pencil over the length of the affordability period, which is 30 years, is because we, the state, are coming to the table to help make that project happen so that we can offer this, they can offer this, these homes to the Nevadans who wouldn't otherwise be able to afford a place to live.
And Steve Acroft, I'm going to make one last comment. I really want to give credit to these developer partners. As was indicated, they've spent many years on this project. They've had a number of hurdles that were thrown their way, which did increase the per door cost, as you've indicated, Governor. but the improvements to that community that will also occur are palpable and impactful to that community. So very, very good project, not just from a housing standpoint, but from an economic development standpoint. Thank you.
Any other questions? Any members? All right, I'll entertain a motion for approval.
I'll move to approve.
We have a motion for approval. All those in favor signify by saying aye.
Aye.
Motion passes. Congratulations.
Thank you, Steve.
Welcome. All right, we'll move on to agenda item number 7, discussion and possible action on the Nevada Housing Division's request to approve the Administrator's Finance Act pertaining to the issuance of up to $15,500,000 of multi-unit housing revenue bonds utilized recycled private equity bond volume cap, known as Townhomes at Fremont, located in Fernley, Nevada. Mr. Acroft.
Thank you again, Governor. For the record, Steve Acroft. Of course, we have Christine Hess in Las Vegas, but I would be remiss to not introduce Maggie Marshall, who is just to Christine's left. You've heard us spout a number of figures and complex financing structures. Maggie is our financial advisor, and she helps underwrite all these deals that come before you. And I'm not going to take credit for being the brains of the operation. I really rely on the two people that are down at your desk. And just want to thank Maggie for attending today. She's here to talk about the issue of recycled bonds and how that's going to be used, and to provide some backup support. But let me do the official part, which is we come before you to seek the approval of the board for the findings of facts pertaining to the issuance of $15.5 million of NHD multi-unit housing revenue bonds utilizing recycled private activity bond volume cap to be held in escrow and preserved for the Townhomes at Fremont project, which will be presented to this board for approval at a future Board of Finance date. Ultimately, these bonds will be used to provide for the new construction of a 293-unit affordable family townhome complex in Fernley. The development group is led by Lincoln Avenue Capital, and I will now turn it over to Christine for further commentary.
Great. Thank you, Steve. Members of the board, Christine Hess for the record. Steve, if I may also just point out the findings of fact and the fact that there was a slight revision in the findings of fact from our traditional projects, in order to account for the fact that we are for the first time recycling multi-unit housing revenue bonds. Very exciting and cool. That's why I was like, we need a full team. I wanted to come down to, well, I was down here in Vegas and I said, let me be here also in person, ask Maggie to join us. And to my right is Ben Taylor from Lincoln Avenue Capital, which actually, but for this group, we're not quite ready to roll out our recycled bond program. But as you'll hear in this project, we have a unique opportunity to kind of pilot, test the waters of multi-unit housing revenue bond recycling with the support of Lincoln Avenue. So just want to shout them out and happy to take questions. So this request represents the Housing Division's first foray into recycled multi-unit housing revenue bonds. Lincoln Avenue Capital is in a position in which they are able to recycle their own original bonds that were issued for Pinion Apartments. You'll recall we approved that project. It's built, leasing up in Reno, and pay down $15.5 million of the $55 million that was issued in August of 2023. And in turn, the Housing Division will issue up to $15.5 million of these recycled private activity bond volume cap to provide a funding source for the upcoming project known as Townhomes at Fremont. The recycled bonds will be initially issued in escrow mode to preserve the cap. While in escrow mode, the recycled bonds will be fully collateralized by direct obligations of the U.S. government sufficient to pay the required debt service. The underwriter for the project is Stifel, and the borrowing entity is 890 Fremont Street, LP. If I may turn it over to Maggie, who can just kind of give a high level on recycled bonds for the board.
Sure. Thank you, Christine. Again, Maggie Marshall with PFM Financial Advisors. I think Christine gave a good general overview of kind of the project and where it's going. I do want to clarify a couple of things. Number one, the purpose of this issuance is to preserve the volume cap. It's not approving the new townhomes at Fremont project, and that's why those bonds are issued in escrow mode to hold them there until townhomes at Fremont submits, the traditional bond application. We go through the process like we typically would for any other 4% LIHTC deal. Again, I think it's a really unique opportunity that Lincoln Avenue came to the table with this proposal. And another thing I would point out is that the cost of this and the risk associated with this is all being taken on by Lincoln Avenue. They are covering, the issuance costs and all that associated time and energy that goes into it. So just want to give kudos to them. I think that's really all I have to say. Happy to answer questions. And then I don't know if you want to hand it over to Ben to say what he has to say.
We're just really thankful to be here working with Christine.
Who are you, sir?
Ben Taylor with Lincoln Avenue Communities. So we're the developer that has recently completed the Pinion Apartments, and then we have the chance now to utilize some of those bonds that we would not be otherwise using on that project for a potential future development. So well, kudos to Steve, Christine, Maggie, everyone here willing to entertain this. We do work in a number of states that do have recycling programs, which we're excited to have and kick off here in Nevada as well. That has become paramount with bond constraints across the country and the 25% test that has recently gone through and passed at the federal level. So really excited for the opportunity. We're hopeful this will help the state at least see how it kind of gets done and then be able to preserve those bonds for future development.
Is there a timeline cap on this to come to fruition?
Generally, 12 to 18 months is the guideline. And so we're in a position, we'll be bringing forth the townhomes of Fremont here in the next several months to the board with a hopeful close by the end of this year, assuming everything goes plan.
Good. Any other questions? Remember? Andy?
No, I'm good here, Governor. Thanks.
All right, this is an action item, so I'll entertain a motion for approval.
This is Member Edwards, motion to approve agenda item, I believe we're on number 7.
7.
Yes, sir.
Yeah, so we have a motion for approval. All those in favor signify by saying aye.
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 Then did you say aye?
I did.
Okay. Right, motion passes.
Thank
Good
you.
luck to you.
Appreciate it.
Absolutely.
Thanks, Mike.
All right, let's move on to agenda item number 8, discussion and possible action on a resolution approving the report submitted by the Executive Director of the Department of Taxation and the State Permanent School Fund Guarantee Agreement pertaining to the White Pine County School District located here in Nevada. Ms. Eden.
Thank you, Carrie Eaton, for the record. The White Pine County School District will issue bonds in the amount of $13,950,000 to improve various facilities throughout the district, as well as using $3,950,000 to refund prior bonds by requesting a guarantee through the Permanent School Fund. By utilizing the PSF program, the district expects a savings of $500,000. The district currently has $4.4 million in outstanding PSF guaranteed debt. So if the board approves this guarantee, the district will have approximately $46.1 million remaining available under the PSF program's $60 million authorization. The Department of Taxation performed its analysis of the district's application and concluded that they have the ability to make timely debt payments of the bonds without the need to increase its current debt rate. And with that, I have Marty Johnson, the municipal advisor for this transaction, available for questions.
All right, do we have any member questions? Nope. Well, thank you for being here, Marty.
Good to see you, Marty.
Well, congratulations on that, because we know it's a need that is very important in that location. So with that, I'll entertain a motion for approval.
This is Member Navarro for the record. I'll motion to approve the agenda item number 8 for approval.
All right, we have a motion for approval. All those in favor signify by saying aye.
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 All right, motion passes. Congratulations, get to work.
Thank you. They will.
All right, let's move on to agenda item number 9, which is an informational only item regarding the state treasurer's quarterly investment report for the quarter ending December 31st, 2025. Mr. Hale.
Good morning, Governor, and members of the Board of Finance. For the record, Stephen Hale, Deputy Treasurer Investments. Agenda item number 9 is a report on investments as of December 31st, 2025. We are seeking the board's review and approval of the State Treasurer's quarterly investment report. Page 93 of your packet shows the general portfolio of assets under management on December 31st was $8.4 billion on a book value basis. Interest revenue for the general portfolio that quarter was $87 million. Page 94 of your packet shows the historical quarterly interest distributions from fiscal year 2023 to December 31st, 2025. The $87 million distributed in the second quarter was a $1 million decrease sequentially, although a $5 million increase year over year. On page 96 of your packet, top chart shows the general portfolio remains a well-diversified portfolio of high-quality assets, with about 36% of assets invested in U.S. Treasury and agency securities. The bottom chart shows the portfolio remained overweighted in short-term maturities, primarily due to timings of payments and a focus on funding near-term liabilities. Page 97 shows the general fund's external manager outperformed versus the benchmark by 3 basis points in the December quarter. Since inception, this segment of the portfolio has outperformed its benchmark by 1.81% on an annualized basis. Moving to LGIP, page 99 shows the LGIP assets under management on December 31st was $2.2 billion, while the earned income return for the quarter was 4%. This was 31 basis points better than the blended benchmark yield of 3.69%. This concludes my report. I would be happy to take any questions.
We have any more questions of Mr. Hale?
Sure is a lot of money, Stephen.
Trying to keep it going.
You want to go on to agenda item number 10?
Sure.
Well, let me introduce it. For discussing and possible action on the treasurer's investment policies for the general portfolio and the local government investment pool dated July 2022.
Once again, for the record, Stephen Hale, Deputy Treasurer Investments. We have no recommendations for changes to either the general fund or LGIP investment policies. We recommend approving both policies as they currently exist.
All right. Have a motion for approval.
This is Member Edwards, motion to approve the investment policies as they exist.
All right, all those in favor signify by saying aye.
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 Good job, Steve. Thank you. Thank you. Motion passes. All right, we'll move on to the second opportunity for public comment. Anybody there in Carson City?
There's no one here for public comment.
Nobody? Did I hear that right?
Yes.
Yeah, correct. There's no one here.
Anybody in Las Vegas? Christine? You want to?
Thank you.
There you go. That's a good public comment. Anybody? All right, we'll close the second opportunity for public comment and I'll make a motion for adjournment. All those in favor signify by saying aye.
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 Thank you, everyone.
Thanks, everybody.
So,